It's rolling.
Good morning, everyone. I'm Sean Avery. I'm a senior loan officer, as Lauren mentioned, on the SBA 504 loan side of our operations. An SBA 504 loan is a loan that comes through Colorado Lending Source or other certified development companies. That there are about 270 around the country that helps in financing the acquisition of long-lasting fixed assets. By that, we typically mean real estate. So it's always for use of business owner-occupied real estate. It can't be used for an investment property. But if your small business plans include buying the space you've been leasing, or buying land and constructing a facility for your business operations, or moving or expanding your operations into additional real estate, this is a product that's designed for that. It features 90% financing, typically, in most cases, or in many cases. So a 10% down payment. It's a long-lasting fixed rate of interest on our loans, 20-year term and a fixed rate of interest. We're always working in conjunction with the bank on a 504 loan, in partnership. The bank is typically lending 50% of the total project expenses. We're lending up to 40% of the total expenses, although it may be less than that in some cases, which we'll talk about shortly. And then the borrower's contribution is 10%. In most cases. So to look a little bit more closely at the structure, the 10% down payment requirement is for a company that's been in business for 2 years or more, or if a manager, for example, is acquiring a company that's been in business for 2 years or more. And that's 24 continuous months. That's not tax years. In those cases, if it's not a special purpose property, the borrower's contribution will be 10%, and a bank will lend 50% and have a first deed of trust on the project. We will lend 40% and have a second deed of trust. The reason why that's important is because the bank has a first deed, they're more likely to make a loan, and they're more likely to make a good loan for a business. So that's one of the advantages of the program, just by virtue of its structure. If, however, the company that we're working with has been in business for less than 2 years, or if we have a special purpose property, and you can contact us to ask about that. That's if it's a hotel, a car wash, we have a list. Then the borrower's contribution goes up by 5%, and the SBA part goes down by 5%. So then it's a 15% down payment. If it's both a startup and or a business that's been in operation for just a short time and a special purpose property, then the down payment goes up to 20%. So what it can be used for is to purchase commercial real estate for business operations, to purchase the land that you're going to build on, and to construct and make renovations, construct from ground up or make renovations. Any furnishings, fixtures, or equipment that are going into the project can be financed, and the related expenses of the financing can also be included. So that includes bank fees, closing costs, appraisals, environmental reports, and that sort of thing can all be financed as part of the overall project. The benefits of the 504 loan, I'm sorry, I'm on the wrong slide. The terms of a 504 loan. The bank's portion of lending is their own loan. The SBA is going to require that they go out at least 10 years on their term. The most typical loans we see will be a 10-year loan with a 25-year amortization, although that's certainly not required at the bank. And the bank sets its own interest rate. And because they've got a really great position on their loan and a great loan to value, it's typically a very competitive rate. We often see bank rates between 5 and 6% these days. Colorado's Lending Source loan is, as I said, a second deed position, and our portion can be up to $5 million, and that actually is per borrower, so that could be spread over a number of different projects, and that's just for the SBA portion. Again, it's a 20-year loan. Unless we're financing fixed equipment, and by fixed equipment we don't mean anything. We don't mean rolling stock, anything with a VIN number, but we do mean things like printing presses or commercial laundry equipment or technical medical equipment like radiological equipment. All of that could be financed, and if that's included with real estate, it's typically part of a 20-year package as well. Otherwise, if we're financing that on a standalone basis, it's a 10-year loan, also with a fixed rate of interest. We set the rates in the month in which they're funded. As you can see here, back in March, our rate was 5.289. Of course, we've had monthly funding since then. I apologize I didn't update this before the webinar. Our most recent rate for our September funding was 5.002%. And included in that are some income to us and income to the SBA guarantee pool. So that really is the rate for the full 20-year term. There is a prepayment penalty on the first half of the term, so for the first 10 years of the 20-year loan or the first 5 years of the 10-year loan. And it is a significant prepayment penalty in the first couple of years because it starts at about 3% of the SBA principal and gradually reduces throughout the 10 years of the prepayment penalty phase. But it's an assumable or assignable loan, so if the business were sold and they could assume the loan, there would not be a prepayment penalty. So now to talk about the benefits. A 504 loan reduces the down payment required. A typical commercial conventional loan will be a 20%, 25%, or in some cases 30% down payment requirement. Of course, at 10%, 15%, or 20% is considerably less on a 504 loan, and that keeps operations, that keeps cash in your business for operations where you want it. It also means that you can self-fund your own growth. You can accelerate your expansion because you're keeping cash in the business, and because you're realizing, typically in many cases, you're realizing some reduction in your rents for your leasehold because of depreciation allowance and interest allowances on your taxes. Because you've got a 20-year fixed rate, it helps you with long-term planning, and you're investing in yourself. It's often part of a small business owner's retirement plan to own the assets of their business that the business is paying for anyway. And it gives you something to sell 10, 20 years out when you're ready to retire or to go out and be an entrepreneur in a new direction. So it certainly gives you more control. On our next slide, we have an example of a 504 loan. In this case, it's a $2.5 million project, of which $1.2 million is buying an existing building on land and land. About $760,000 of renovations and improvements are going in, and about $350,000 of FF&E, furnitures, fixtures, and equipment. Then we're paying for the expenses involved in the bank's closing, our closing, the appraisal, et cetera, and some contingency. And that all grosses up to a total project cost of $2,532,000 in this case. It's a conventional 10, 50, 40, or a typical 10% down, $253,000. And a word about the borrower's equity. That can be borrowed if we can see a means of repaying it. It doesn't all have to come from saved cash. Or if you've held land, the land can be contributed instead. The SBA loan in this case is just over $1 million, and the bank's loan is $1.2 million. And that leads to combining a typical bank rate of about 5.2% and a typical SBA rate of about 5.2%. That gives us combined loan payments, monthly payments of just over $14,600, and a combined blended rate of about 5.2%. So you can see how this form of financing can bring within reach an acquisition that otherwise might be more challenging for a business.
So we'll move on to Danny Westlake, who will talk about the Small Business Administration 7A loan program.
Okay. Good morning, everyone. I'm Danny. I work primarily on the 7A side. The SBA 7A loan program is a loan that is from a lender and guaranteed by the U.S. Small Business Administration. A lender can include banks, credit unions, and other regulated lenders. And this is a lender direct program, not an SBA direct loan. So the loan is fully funded by the lender, and then, like I said before, the SBA guarantees that loan on behalf of the lender. Lender and SBA approval is required, so 2 approvals are required. And just keep in mind that each lender has unique underwriting requirements internally, in addition to the SBA's requirements. So it's really important that as a small business owner you shop around, as each lender will have a unique appetite, and even if the request is SBA eligible, there will always be different requirements per bank and per lender. Colorado LendingSource is not a 7A lender, but we are a lender service provider, and so we assist lenders with the processing of 7A loans. We communicate with the SBA on behalf of the lender, and essentially the lenders outsource their processing and communication to us. So the 7A loan can be used for almost all business purpose requests. And covers a variety of uses. Working capital, business startup, business expansion, business acquisition. The 7A can be used to finance franchise, leasehold improvements, machinery and equipment purchases. Similar to the 504, it can be used to purchase, build, or renovate owner-occupied commercial real estate, and it can also be used for debt refinance. Commonly what we see is a mixed use or a variety of uses, and depending on specific requests, it could be 1, 2, or 5 uses. We're always happy to clarify eligibility issues around these uses. And we're going to do a quick poll. If you're a small business owner in need of financing, what do you need to use the SBA 7A loan for? And we're launching it right now.
I'll give you guys a few seconds to answer this. Remember, you can ask questions anytime during this webinar, so please feel free to do that if there are any questions. So it looks like some of you would need financing for business startup. All right. Let's move on. Thank you for your participation.
So let's talk a little bit about the terms of the 7A. Maximum rates are set by the SBA, but they can always be lower than those maximums. And the actual interest rate is always going to be negotiated between the borrower and the lender. Both fixed and adjustable rate options are available. Currently, the fixed maximum rate is 8.09, and the variable is prime plus 2.75, and that changes monthly. SBA charges an SBA guarantee fee, which is typically 3 to 3.75% of the guaranteed portion of the loan. So just a reminder that the SBA is going to guarantee 75 to 85% of your loan, and then you'll be charged that guarantee fee on the guaranteed portion. Currently, loans of $150,000 and under have a $0 guarantee fee, which provides incentive for lenders to lend to those very small businesses who need smaller amounts. Any fees that the SBA charges to the bank can be passed on to the borrower, anything used specifically to fund the program. Other costs can include packaging fees, recording fees, and miscellaneous closing costs. Just a reminder that the bank cannot charge an origination fee. The term of the loan is going to be based on the use of funds. Most of the uses you saw on the slide previously will allow a term up to 10 years. And then heavy equipment and commercial real estate can usually go up to 25 years. And then just to touch on the rates again, the majority of our lenders charge the maximum variable, which is prime plus 2.75, and prime is at a historic low right now, so that's what we're seeing. The benefits of the SBA 7A loan are really to secure a loan that is not available otherwise. So this is a loan program for borrowers who can't obtain conventional financing. Financing can go up to $5 million, and borrower equity is always negotiable, so how much the borrower puts into the loan can always be negotiated. The SBA 7A allows for longer terms, a flexible use of proceeds, and competitive pricing. So like we've mentioned before, we highly encourage that you negotiate with the bank and shop around, especially regarding the terms of the loan. And this loan, again, is meant to be for loans that cannot be obtained conventionally. And then we have an example here of a 7A loan that was used to fund the expansion of an existing dental practice. This is an $845,000 loan. And as you can see, under use of funds, there were a lot of eligible uses within this specific loan. There was some refinance, there were some improvements to the space, purchase of equipment and furniture, working capital, and then you'll see that a lot of the closing costs and guarantee fees were rolled in as well. This loan was fully financed through the bank and then had a 75% guarantee from the SBA, which resulted in a $22,000 SBA guarantee fee. In this particular case, no cash equity was required, as the business showed existing equity on their balance sheet. Just another reminder that this equity piece can always be negotiated between the bank and the borrower, but often if it is a startup, that's almost always going to be a requirement that some equity is put down. This term was this had a 15-year term due to the blended use of loan funds. There was some heavy equipment in there too. And then the interest rate maximum was 6% at this time, but the bank and the borrower negotiated an interest rate of 5.5, adjustable every 3 years, which is below the max, but again, it was negotiated. And then the lender took a lien on all business assets, second deed of trust on the owner's personal home, and an assignment of life insurance. And collateral is always going to vary from loan to loan, so feel free to call us if you want to talk through those situations.
Hi, this is Sean again, and next we're going to talk about Colorado Main Street loans, and this is our pre-bankable or non-bankable direct loan program. And what we mean by that is that these are for businesses who, either because they're very early stage or in a startup mode, or because they're just not very well established or recently emerged from a rough time. They can't be going into a rough time, but because of their circumstances can't obtain a 7A loan, as Danny was just describing. And in fact, it's part of the requirement of this program that you have been turned down by a bank in order to apply for it. We fund these loans ourselves from a revolving loan fund pool. So that's important to know because it means that our loans are funds available. When we have funds, we can make loans. And we have basically two buckets that we pull from. One is a statewide loan fund, and one is a rural loan fund. The statewide loan fund is intended to help with businesses, whether it's for any of the uses in the 7A loan program that Danny just described. And the statewide loan fund ranges from $50,000 to $200,000. And then our rural loan fund is specific counties in northeastern Colorado. And it's available for communities with a population of $25,000 or less. And again, just to reiterate, this is specifically for small businesses that can't obtain a conventional bank loan or aren't yet ready for a 7A loan. To reiterate the uses of a Colorado Main Street loan: working capital, cash for startup to help ramp up, to help expand, to acquire inventory, FF&E, furniture, fixtures, or equipment, business acquisition, if you're acquiring a small business, and debt refinance. That's on our rural loan component or program. Owner-occupied commercial real estate purchases, gap financing, it's certainly available for that, and sort of as a factoring financing until a payment gets made on a shipment. And also, it can be used in agricultural refinement or packaging or any kind of production, but not for direct production of agriculture, not for growing agriculture. So processing, but not production. We have different terms for our two different sides of the loan program with the Colorado Main Street loan. Statewide loans, the financing starts at $50,000, and we can lend up to $200,000. And again, that's when we have available funds. The interest rates are fixed at 7%. Terms are fully amortized. And it's based on the loan purpose, repayment ability, and collateral. That's what's going to set the term. We charge a 1% origination fee, and we can include the closing costs and any applicable reporting requirements in the loan as well. For our rural loans, these are for smaller loans. It's $10,000 to $35,000. The interest rates will be a fixed rate of interest somewhere between 6% and 9%. Again, it will be a fully amortized term based on the use of proceeds and repayment ability. And there's a $300 processing fee plus applicable costs on the rural loan program. This program benefits, the Colorado Main Street Loan Program benefits businesses that aren't yet able to gain financing through other means and provides a competitive interest rate when compared to other sources of financing that people typically resort to in those circumstances, like credit cards or friends and family loans. So it can certainly provide a better means of financing that's more or less designed to be replaced by more permanent financing as the business stabilizes or grows. It might be taken out by a 7A loan within a couple of years before it's even fully paid off and refinanced into that loan program. We have an example. And this is an actual example of a startup group exercise facility. The owners purchased about $12,000 of equipment and installed it. The cost of installation and shipping was all included in that. Furniture and fixtures for the general facility was about $13,000, a little over $13,000. And working capital to help them fund their operations, do their marketing, pay employment expenses, et cetera, while they were getting ramped up, came to about almost $52,000 as well, for total project costs of $78,000. We required a 15% down payment, which equated to $11,700, which the borrowers were able to come up with. And we loaned $66,306 on a 84-month term and at a 7% rate of interest. So the monthly payment was just over $1,000. And this loan, I'm happy to report, is performing well.
So how do we qualify for these types of loans?
Well, the 504 loan program, it has to be a small business and it has to be for profit. It has to be located in the United States. For Colorado Lending Source to make the loan, it has to be located in Colorado. And if you are entertaining a 504 loan project, type project, real estate or equipment project in another state, we can certainly refer you to a certified development company that operates in that state. The business has to plan to occupy 51% if it's buying an existing building. If it's building a structure from the ground up, it has to plan to occupy 60%, and the rest can be rented out. If it's a new constructed building, you can only rent out 20% of the total square footage on a long term, though. We require guarantees from the operating business. In most cases, we have, for 504 loans, we'll have a borrowing company that's set up to hold the real estate, although this is not required. It's what we see most commonly. And the operating business itself that then becomes a guarantor. Anybody who owns 20% or more of either one of those entities has to also offer a guarantee, and typically it's a full unconditional guarantee as well. Although it's not usually a secured guarantee, it's very rare in a 504 loan to ask you to pledge personal collateral like a home, for example. It has to be a small business, and that means that it can't have more than $15 million of tangible net worth. And it can't have made more than $5 million of net profits after tax when averaged over the last 2 years of tax returns. It's a cash flow program. We're gonna approve the loan based on the repayment ability that we can see on 2 years of tax returns from the business, if it's an established business, or on pro forma projections, if they're very well constructed projections, if they give us a really clear basis for understanding what the assumptions are that support those projections, both in terms of the management ability and the marketing plan, and in terms of the underlying demographics and industry research. Good business plans with well-researched projections can be funded with a 504 loan. The business history and management experience is important both from the execution standpoint, that your company is going to be run well or is running well, and also from the character standpoint, because we are a lender and we look at character in the same way that a bank or any other lender looks at character. It's an essential part of our analysis. And just to reiterate, startups are eligible, but there is a larger down payment requirement.
And then very similar to the 504, a lot of the qualifications on the 504 match the 7A. Some of the differences, both the lender and the SBA approval is required. So just remember, 2 approvals are required. Similar to 504, the cash flow of the business needs to reflect the ability to pay the loan payment and all obligations. That can be proven historically or with projections that have solid explanations. Business history and owner experience is key. Kind of different from the 504, collateral is going to vary greatly with each loan application. First, lien on business assets will always need to be pledged. And then from there, the banker and the borrower will discuss additional collateral if needed. Owner guarantees are required for any owner over 20%. And then, as we talked about before, the lender will determine the amount of owner equity that's required.
For our Colorado Main Street loans, we run a credit check, and if there are any blemishes, a 30-day late or something like that, we can make a loan based on a satisfactory explanation. And also that we can see that this is a one-time event or perhaps in some cases 2-time events, as long as we can see that it's not an ongoing character issue. And that criteria for credit analysis also applies to the other loan programs that we're involved in. For a Main Street loan to be approved, it has to be declined by a conventional lender, at least one decline. A bank has to turn you down. We have to see that the business is experiencing growth or can grow through the business plan. They can't be on a downward trend. It can't be a form of rescue for a business that's having troubles. We typically want to see a 10 to 15% injection contribution from the owners of the business. And this can be either a down payment on the loan or it can be what we see on the balance sheet already invested in the company. And we have to see 2 years of projections on a month-to-month basis, 24 months of projections, and a complete business plan for a Colorado Main Street loan. We have to understand what's going to help the business to grow.
So how do I apply to these programs?
For the 504 loan program, because we're always collaborating with banks on this, it's most common that the borrower will make the first approach through the bank. And in many cases, the bank will recommend a 504 loan if they think it's appropriate. Although in other cases, if the borrower knows of this program and tells the banker they're working with that they'd really like to look at a 504 loan option, the bank's typically more than happy to provide that view of the financing. The bank will often take the lead in collecting all the borrower information and the project information and then sharing it with Colorado Lending Source to minimize the duplication of effort between bank and borrower. We typically say that if you've got a banking relationship, a depository or borrowing relationship with a bank, and in particular if you feel it's a good one, please use that bank. We work with every bank and credit union in the state, and we're happy to do so. If you don't have a bank relationship or you've soured on your relationship, that happens from time to time, call us and we'll give you typically 3 recommendations of banks in your geographic area that we feel might take a liking to your loan. We don't steer towards any bank because we collaborate with them all, but we will be able to furnish a list of people who we know are interested in doing 504 loans. Our 504 loan application is on our website. It has a list of items that you'll need both on the bank side and on the SBA side, and some SBA-specific and Colorado Lending Source-specific forms that we'll want you to complete. But we don't want to, the application is not an exercise or a barrier to entry. If you've already got a loan underway with your bank and provided them with information, please don't feel you need to fill that out. We'll walk you through the necessary SBA forms.
To apply for the 7A loan program, you need to apply directly to the bank, not the SBA or through Colorado Lending Source. So it is important that you have a lender on board before you start the SBA process. Some ideas we recommend when you're shopping around for lenders, as similar to 504, we suggest you start with any lenders you currently have a relationship with. If you don't have a relationship with a lender, there is a list of lenders on the SBA's website that you can search by location or loan volume. And then just start with lenders in your area, community banks, big banks, small banks. We recommend you just check out a few banks, compare them, shop around, talk to different lenders, and just find someone that you feel comfortable with and can build a relationship with. We have a 7A lender resource guide on our website that includes a handy list of what you'll need to include in your application when you do apply at the bank, and as well as a summary of the loan program and the SBA application documents. Another thing you'll just want to make sure you have is you need to be able to show cash flow. So again, whether that's historical or projected, you need to be able to show that you can pay the obligations through your historical or projected financials. And then we don't want anyone to be discouraged. You may need to apply to multiple lenders to find the right fit, but just because one lender says no doesn't mean that it's necessarily SBA ineligible. For example, some banks may not be able to help you with an SBA 7A because they don't fund startups, but the SBA can approve loans for startups, and so we are happy to clarify what's SBA eligible, and if you're struggling with a few banks, we're happy to recommend some others.
For Colorado Main Street loans, it's simple. Our point of contact is our Executive Director, Mike O'Donnell. He'll start out with a chat over the phone or in person if if you want to make the trip down to our office to talk about the state of your business and whether or not a Main Street loan might be right for your company. Mike's email address is simple, mike@clsloans.org. There's also links through our website that can contact him. But he's the executive director of all our programs, and he is directly involved in the Main Street loan programs, and is a great place to start for that.
In some cases, a borrower isn't ready for 7A or 504 or even a good, perfect fit for our Colorado Main Street loans. And so we just wanted to throw out a few other organizations that also provide financing here in the state of Colorado. A few of these are certified development financial institutions. Axion provides loans from $0 to $350,000. Colorado Enterprise Fund provides loans up to $250,000. Rocky Mountain Microfinance Institute provides loans up to $2,500 and also provides a boot camp for small business owners looking to grow their business. And then Colorado Housing and Finance Authority also provides some loans. We also wanted to mention a few training opportunities for small business owners. Colorado Lending Source actually puts on a 10-week program called the Ice House Entrepreneurship Program, and it really helps small business owners and individuals develop an entrepreneurial mindset. If you're interested in learning more about that program, there's a lot of information on our website. Some other organizations are Mikasa Resource Center. They provide entrepreneurs with a variety of business development services, classes, seminars, and opportunities. Again, Rocky Mountain Microfinance provides a lot of different programs. The SBDC, the Small Business Development Centers throughout Colorado, provide free and unlimited business consulting and seminars and low-cost training programs. Oftentimes, we recommend small business owners start at the SBDC to start working on their business plan before they approach a bank for financing. And then the Veterans Incubator is a nonprofit providing veterans with support to start and sustain a business. And again, the majority of these organizations we already mentioned, but a lot of them provide additional support and consulting around business. Colorado SBDC Network, Mikasa, SCORE, and the Small Business Administration has additional programs on top of the financing that they provide.
So I guess we'll take a moment to see if anybody has any final questions, but that's it for today's webinar. If you think of questions in the future, please feel free to contact me. You can call at 303-657-0010 or feel free to email me as well. I'd be happy to connect you to our different departments if you are interested in any of those loan programs. Also, you can stay in touch with us on Facebook and Twitter. There's a lot of entrepreneurial resources that we post there as well if you don't want to have emails. So thank you very much for joining us, and we hope that you found this helpful.